Welcome to this video, which is all about one of the greatest traders of all time, a guy called Michael Marcus, featured in the book New Market Wizards, edited by Jack Schwager. So who is Michael Marcus? Well, he's a trader actually. In terms of managing money, in 10 years managed to increase the money under management by 2,500-fold, which is obviously a phenomenal performance. But for many years, when he started trading, he was basically losing and not getting anywhere at all. The change from Marcus came when he started speaking to legendary trader Ed Sakota. And we've got a video on Ed Sakota, so you can look him up and his trading tips as well. But he said he learned from Sakota the concept of patience, only to wait for those high odds opportunities and not trade too frequently. And he also learned the courage to hold on to winning trades. And yeah, he was saying about Sakota could just hold on to winning trades for much longer than anyone else. And that's something that I think all traders can learn from. Big trends actually do run a lot further than many traders think. And it does take considerable courage to hold a big trend, because you've got a big open profit. And basically, there's going to be retracements against you and so forth. You've got to have the courage and discipline to hold a big trend. I think, in Forex markets, we are losing at least as many trading signals as we win. So to really supercharge our accounts, we do have to get that confidence to hold for as long as possible. Now, in terms of the best trading setups, he makes the point that he likes it when the fundamentals, the technicals, and the tone of the market, as he calls it, all line up together. So the fundamentals are basically, let's say they're bullish, they'll be reflected in a bullish chart setup, and the tone of the market is one which, let's say it's a bull market, will shrug off bearish news. Now, many traders like to trade fundamentally or technically. Some like to just look at sentiment. But I think if you do combine all three, you do get a trading edge for profit, and also gives you more confidence. I always think it's easier to hold a big trend, for example, if you know the big fundamentals behind the chart. Just looking at the chart, you don't have that confidence as if you know the fundamentals. So I think, combining all three disciplines, looking at sentiment, the technicals, and the fundamentals, is a great idea. Now, he also makes the point that trend following is becoming more and more difficult. And this book was written a while ago, and it's become even more difficult today. And the reason for this is just the speed of information, everyone getting the information at the same time. And he makes a point that when you're deciding a trading signal, you've taken a view of the market, you need to ask yourself the question, has the market discounted my idea already? Okay, it might look a great chart setup, but if everyone else has bought already, if you come in, then you're going to lose. Doesn't matter how good the chart setup is. So he was making the point that you should always question if the market is discounting your trading idea, and basically, how many traders have seen it. And I've always been in favour of doing this. A lot of people just look at chart setups and it looks great to them, and they don't actually think how it might look to everyone else. If it looks great to everyone else, it's probably going to be a losing trading signal. Now, in terms of trading discipline, obviously all the great traders are hot on discipline, and he makes the point that in terms of risk per trade, 5% is the amount that he likes to risk. I think that's a reasonable amount, actually. You've got to be wrong 20 times on the trot to wipe yourself out, for example. And he was saying you should always have your stop in exactly the same time you place your trading order. It's a huge mistake of novices not to do this. If you don't place your stop in straight away, you will be tempted to let a loss run. Mental stops just basically do not work. He also makes the point that when you're losing, you need to cut back your trading. And he's saying it becomes a factor in your mind. You're actually losing, you become pessimistic. And it actually affects your judgment. So cut back in losing streaks, or stop, have a break, and then come back to the market. You do get winning and losing streaks in Forex, and that is why money management is the key to success. Now, in terms of another great trader who actually came to work with Michael Marcus, it was Bruce Covenor. And we've done a video on him as well. He's actually one of my favourite traders. And Marcus was saying that he could see he was a great trader straight away because he was just so objective and always questioning everything, not frightened to change his mind. And that is one of the keys to trading success, is to basically question everything, think of different outcomes, and be very flexible in your thinking. Don't get set in one idea for too long. That leads to complacency. Markets are always changing. And Marcus was making the point that the reason that he thought he was successful was his ability to basically question, be very objective about everything, and do the emotionally uncomfortable things. And by emotionally uncomfortable, like taking losses quickly, knowing basically when to stay out in the market, when something looks too obvious, avoiding it, all these sorts of things, the uncomfortable things to do. And Richard Dennis, another great trader, makes the point in his trading interview in the same book that you should always do the uncomfortable. If it is too comfortable, it is going to be something you shouldn't do, because other traders do the comfortable things. You actually have to do the uncomfortable things. So in terms of Marcus, he's one of the great traders, and he does share many of the traits of Bruce Covenor and Ed Sakota in terms of being able to follow long-term trends, filter trades, and basically think outside of the box, i.e. see scenarios that other traders don't see. I'd strongly recommend you go and read the interview in Market Wizards. It really is very good, and so is the book. So thank you very much for watching me as usual. Take care. Have a good day.